Let's look at the robotics industry. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will go to what I call stationary robots under the megatrends. So I do draw a distinction between robots that can change their location and those who cannot. So yeah, I think that's stationary robots. It's distinct. Pretty good performance, but we have seen a very substantial haircut in this business. I did do an analysis of 3D systems back here in January of this year. At that point, I was feeling bearish because it was just very overextended, and we have certainly seen a very substantial haircut. The thing is that the haircut has been so dramatic that at this point it is starting to become more interesting from bullish perspectives. So Stratasys is today's candidate. I categorize them as 3D printing, 101% here from the 52-week low, but minus 58% from the 52-week highs. Huge, huge, huge move. So here you have the company's website. Yeah, here are their line of 3D printers. They are one of the leading companies in this industry, and I am very, very bullish on this long term. The applications are very far and very wide. There's homes starting to get printed. I mean, it's this is still the very early days, but huge potential. Let's now look at the charts, like long term. This is the Giga picture. I have drawn in some time cycles. They have been somewhat consistent, but the tradability of the time cycles are a bit limited, but there's something there. As you can see, this is definitively one of those stocks where you want to buy low and sell high, because it can have spectacular crashes and also very spectacular rallies. So that is the personality of this stock. This is a big percentage mover. What we do see is that after the latest pullback, we have definitively fallen back into a price level where there's been a lot of action in the past. So this is definitively a very key area, and there's good reason to expect horizontal support based on the history. Okay, so if we zoom in a bit here, RSI fell from extreme overbought levels to much cooler territory, so basically in the neutral zone at the moment. What I do find interesting here is the red 200-week moving average. Here it was tested as a support. It did break, but you see that it did trigger a rally. Here it is tested as a support, and you see that intra-week. So within the week, we are testing it here multiple times as support, which is interesting. Not only that, but we also have the blue 100-week moving average and the green 50-week moving average about to give us a golden cross. Yeah, so basically there's a lot of, not only do we have horizontal support, we also have massive moving average support here, long-term moving averages. There's only a 26% positive correlation here with the S&P 500. Zooming in here to the daily data points. Here we have the red 200-day moving average. So here we have the 200-week and the 200-day. So basically there's so many support levels, it's becoming almost comical. You have horizontal, you have long-term moving averages. Here also the short-term are coming to help. So you can see here, if you look at history. So here you can see that, the 200-day moving average, it is a big deal. It can function as a solid resistance level, but what once was resistance has now very likely become support. That is very interesting from a bullish perspective. You could argue that we have some small time cycles at the moment. There's something around here, though. As far as time cycles go, this one it's a bit messy. But we have more than enough of other technical signals here. Yeah, from a technical perspective, this looks very interesting from a bullish viewpoint. But so let's explore further. We cannot draw conclusions yet. Here is the seasonality of the stock. SSYS is the ticker. The seasonality is a bit messy. You see that the vast majority of months, it's 50-50, almost literally here 50-50, closing higher or lower. So not really that informative, but it gets a bit more nuanced when we look at the percentage gains or losses. So there's a tendency, as you can see here, that there are gains. It's more frequent for us to have gains than losses, but bear in mind that these are averages. And we have seen that the rallies are very dramatic and the pullbacks are very dramatic, and that can definitively mess up these percentages in a big way. Going here to Finviz, they do draw horizontal support that we have bounced from. We have lost the diagonal support here in light blue. Looking here at the Analyst price target, looking at the most recent developments, the recent prices are certainly above the stock price, and the average price target is 29% above the current price of the stock. That is definitively bullish. Saks.com, they have a number for sell, F value, but they do have an A growth and B momentum. Industry rank, bottom 23%, but they have a very, I don't like the categorization, computer peripheral equipment. Yeah, that's very broad. There's no dividend, not a huge surprise there. Yeah, I think that to sum up my take here on this candidate, the theme is definitively very interesting, but as we saw here with the percentage moves, this is definitively, an industry where you want to time your entry and your exit. At these levels for Stratasys, I think that it is very, very interesting. I mean, we have a bunch of technical support levels. I mean, they were all over the place. Hence, the bulls, they have what they need to rally. So there's no like real excuse for the bulls here not to be able to capitalize on the technicals. The seasonality was kind of messy, but that's also because this stock moves huge up and down. The fundamentals were definitively towards the bullish side of the spectrum. So yeah, this is very interesting candidate. But because of the way it moves, it is definitively a good idea to have some stop levels in place, because it is a wild one. And when you have gains with these kinds of stocks, you also want to move your stop along with to lock in your gains, because as we saw, when there is a big pullback after a big rally, it can be very, very substantial. And just do some quick calculations here. So let's say that you bought the breakout above the 200-day moving average, and here you have 265-ish% gain. That is obviously very good, but let's say that you didn't have any kind of stop levels, then you would now have 53%. That's a pretty big difference.